Mortgage rates pulling back for the third straight week. The 30-year fixed mortgage fallen to 7.44%. That's down from 7.5%. That's the lowest level since September 28th. For more on what this means for home buyers, joining us now is Jeff Taylor, Mortgage Bankers Association board member and Emphasis Digital Risk founder. So Jeff, 7.44%, I guess that's a bit of relief for those looking to buy a home. But what do you think the impact here is for the market?
Well, thank you very much for having me today. So look, we were at 8% this only a month or so ago, so we're 50% basis points down. I think the big sort of news is when we look at the CPI dropping this month, we're starting to get closer to 2%. As Chairman Powell said, we still have a period of time to go. And also the Fed decided obviously not to raise. So I think sort of that sentiment is, okay, we're not going to see another raise. Inflation is starting to get better. And that's where you sort of seeing a 50%, a 50 basis points drop from the high of 8 down to 7.44%. I think this also will start to signal over the course of the next year an area where we'll start to see rates drop over the course of the next 6 to 12 months if the Fed continues to act the way that it is, and we're continuing to see inflation finally get more under control after the fight for the last couple of years.
And Jeff, nobody thinks that it's going to be a quick and easy process, that even if rates come down, that the housing market's going to remarkably recover overnight. But you do pinpoint, in addition to rates coming down, a couple of other things that could be supportive for that recovery. And one of them is what home builders are doing in terms of new housing. Talk us through that.
Great point, right? So many home builders having made the best year they've ever had this year. Yet what you're seeing is home builder sentiment has been down 3 months in a row. And about 62% of home builders are still providing incentives for people to buy these houses. So if you're looking at a market that's incredibly tight on existing home sales right now, you have home builders right now that are building at an all-time high, and 62 are providing incentives that can really make it more affordable to get into a house. That's a win-win if you're looking to buy a house right now. So I would be very aggressive on the new home builder side, looking if I was currently in the market trying to figure out what I want to do, existing home or new home.
And Jeff, I'm just interested, are there historical parallels that you see that we can look to, sort of similar housing environments in the past that kind of mirror what we're seeing now, and any lessons learned from those?
So a couple of the most important things are we have an incredibly structurally sound housing market, right? These loans that have been made over the last decade are sound, right? Debt to income ratios, very strong. I think our overall delinquency rate is about 3.62%. And if you look at the Fannie Freddie book, that's sub 1%. So, with FHA and VA, it's a little bit higher. So we look extremely sound. We have over 30 trillion in home equity right now. So even if you have the occasional, the person has a life event or a credit event, we're nowhere close to seeing mass sell-offs in any one specific area like we did maybe in 2008, 2009. So this market is very strong. It comes with its challenges, right? If I'm looking to sell my house to buy a new house, am I really going to get out of my 3% mortgage and sign up for a 7% mortgage? That might be harder to do. A lot of people might feel like I'm locked into sort of redoing the existing house that I have, or look for buying a new home.
So Jeff, when all is said and done, what's going to break the logjam?
What's going to break the logjam? What could break the logjam is we had a couple of million more houses magically appear, which is not going to happen. So I think it's going to be consistent. You're going to see home builders continue to build, which will put more supply into the marketplace. And then remember, we didn't build 6 million houses between 2010 and 2018. That's kind of one of the reasons that we're in this spot right now. So as more homes come into the marketplace, I think that's going to be something that will start to ease some of the issues as far as how tight these markets are. And then over the course of the next year, at the MBA, we believe that you could see a full 2% come off from 8% down to 6%. So as rates do decrease, which we are anticipating to happen by the end of Q4 2024, that could also be another incentive for people to get back into the market and increase the home buying market.
Jeff Taylor, thanks. Good to catch up with you.
Thank you for having me.